Hey guys, what's up? Excuse me, I just got through eating dinner. Ready for a good show tonight. While we're waiting for everyone to get here, let's take a look at the market. Welcome to the Daily Factor. Jackson, you want to eat, don't you? Let me go feed Jackson while we're waiting on people to get here. Okay, thank you. Okay, Jackson, you got food over there, buddy? All right, but let's still look at the market while we're waiting on folks to show up. There's 70 of you guys here. Thank you for being here. Come on, futures reopened. Let's see what S&P futures are doing. I haven't checked since they reopened. The VIX versus VIVIX thing got worse today. I mean, of course, people are still hedging, and they have been since October 22nd, pros and Joes. So anyway, we'll see. The caution light's been on pretty much straight since October. It could get worse, though. I mean, but the caution light is definitely still lit. All right, this is a daily chart of ES. Well, this doesn't look that bad on the daily chart. So, but let's look at the 30-minute chart and see where futures are at. See if we're making new lows, making new highs, grinding. See if we do. Is that right? Do we already? Oh no, that's 2 o'clock. So the low was set at 2 o'clock, and since then we've just gone sideways. All right, so that's ES. Let's look at NASDAQ futures. Relative to their local low, the NASDAQ futures look a little bit stronger. Still, it's looking like risk off, though. This is the perfect right here, almost revert to mean, and then fell. Revert to mean, fell, and sell. It's just kind of the way it's been going. Let's look at Bitcoin. Oh, geez, what's going on here? Well, I can't tell if that's a green bar or a red bar. Is it bouncing out of that area? Anyway, it's just a line on a chart. Who knows? This is just where I'd expect buyers to be. I'd be surprised if there aren't buyers there. In fact, I bet there are. But the thing is, will they be able to sustain a rally, or will it go back to the previous POC, check the previous POC, and then start selling again? You know, that's a very common pattern, and that's exactly what happened today well, it happened in the middle of the night. It happened in the middle of the night, and then it started selling off. So, well, the good news is we're building out a new POC down here. We just keep building out lower and lower POCs, making lower and lower trading ranges, which is not great news for bulls at all. All right, so I have a great show planned out for you tonight. Let me come over here and make sure you guys are all here, and I can start. Hey, DD, how are you doing there, bud? Okay, yeah, there's 15 of you guys here. That's a pretty good crowd. Appreciate you guys being here. So don't forget, everything you hear me say is not financial advice. Consult a professional advisor. These also my metrics. I really like my metrics, but this metric or any other metric looks at the past. It can't predict the future. So it'd be great to have bought a lot of these funds I'm going to talk about a quarter ago. Now, is it going to be as great in the next quarter? Well, that's what makes it fun. If it was easy, everyone would do it, right? That's what you have to figure out. But this gives us an idea of how they have been performing. The MaxFactor is a proprietary metric of mine that looks at it's better than total return. Total return is deceiving. It separates the elements out of total return, and it studies how they interact with each other. We all want as high of a yield as possible, but I don't know if anyone wants a high yield in an ETF that's super duper risky. So we can quantify it, and we can look at which ones are relatively better. So tonight's show is I think going to be an interesting show. Tonight, instead of Mr. Monday, I mean, Mr.'s going to be depressing to look at anyway. I mean, instead of Mr. Monday, maybe we'll do that next week, or maybe we'll do it tomorrow night with Tesla Tuesday. Maybe we'll do Tesla Tuesday and we'll do Mr. Monday tomorrow night. Anyway, but there's been a lot of talk and talking to a lot of folks on Twitter and in Discord about the relative merits of these funds. And so I decided to do Sustainability Monday, and I also decided to make it an editor's choice. We're going to look at the metrics too, but the metrics can't tell you everything. And but I'd also be happy to take opinions from you guys. But what I did is I went through there and I picked the starting lineup. I picked the top 25. There's no HOW in there. There's no GUI, even though those are doing great this quarter. It's based on one stock. So, by sustainability, I'm looking at things based on multiple stocks or even on indexes or entire industries, or I don't know, entire industry, but yeah, kind of like that. And so I picked out the 25 contestants, and they're good ones. And we're going to look at the metrics on them for sure. But then I'm going to rate them, and show you which ones I think are the most sustainable. And we'll see if we agree or not. That'll give us a good chance to visit and stuff. All right, what are you saying here, DD? Mr. has more Bitcoin than their book value. Yeah, so that should be a good thing. So if you buy Mr., it's like getting a discount on Bitcoin, right? Because they're under one, whatever that metric is. So that should be a good thing. The problem is, though, Bitcoin's price is in free fall, right? People are also, so if you buy Mr., you get a good deal, but you get a good deal on a falling asset right now. So I mean, it's also a bet on the asset to turn around. But no, that's good news for Mr. And I wasn't trying to be mean when I said it's, that it's depressing to look at. But we've done Misty Monday the past, 4 or 5 weeks. So I thought we'd switch it up. And because there's so much talk now, because the market sucks, and it has for a while. That's all I said for the past week or something. So since the market sucks right now, I thought it'd be good to look at the safer alternatives and the ones that are theoretically more sustainable. Some of these aren't super sustainable, and you guys know which ones I'm talking about. It's mainly the ones that have super high yields. But then we have some of them that have a pretty decent yield and are fairly sustainable. And I tried to identify those. So anyway, let's get in the middle of it. All right, we'll do it just like every other time. We'll go yield chasing. All right, highest yield is GPTY. That one's a good one based on, the GPT comes from crypto. It has crypto and big data, blue chip stuff. Anyway, 34% yield. Great job. That one's from YieldMax. Anyway, then we have XPay. This is a good one from Roundhill. Now, they don't do options. They just give you your own money back. But sometimes that can work. And, then we have CLM. This is from Cornerstone. You guys know all about CLM. Then we have IVVW. I like this one a lot. 16% yield. We have TLTW. That's what I said based on the entire industry. That's based on a basket of long bonds. And bonds have like a little bit of less correlation to stocks. I think it's, even though that's technically based on one thing, it's a basket of bonds. And I think it's fair to look at bonds when you're talking sustainability. And then we have T-SPY. Now, this one's real sustainable. This one's from our friends over at Tap Alpha. Psychotar is doing a great job. Our other friend, Matthew Tuttle, is a sub-advisor on this fund. So we have a friendly relationship with this fund. Then we have XV from Simplify. That's a barrier fund, and that makes it pretty safe. It's pretty safe. Barrier funds the market has to go down a lot before they're affected too much. They're like hedged equity funds. They can't drop as much as they mathematically can't drop as much as other funds. Or as fast anyway. I guess they could. The market has to drop 15% before they really start losing money. And then we have CAIE. This is a similar concept to XV. It's auto callable bonds, but it has a huge buffer built into it. I think about a 40% buffer. So That one's definitely safe and sustainable. Then we have TLTP based on bonds again. We have Tuggin, which is one I never talk about, but it's a good one. Well, probably let's just go look at Tuggin really quick since we never talk about it. Let's get out FinViz. Tuggin, STF, Tactical Growth in Income. I mean, it's a good looking chart, right? Pays 11.28% yield. Great looking chart. No assets under management, just like a lot of these. The stable, no one wants stability. They talk like they want stability, but they vote with their pocketbook and they vote for the crazy ones. But oh well, that's fine. Yeah, 68 million assets under management. This one could be a good one. If you look at their holdings, it's big tech. I mean, NVIDIA, Apple, Microsoft, Broadcom, Amazon, Alphabet, Tesla, Facebook. It may just be based on the S&P 500 because that's probably pretty close. It's probably what it is. It's probably an S&P. I did a review on it a long time ago, but it is a good one. No assets under management, and I'll know who the heck STF is. I guess we can click here and find out real quick. All right, STF management, RETFs. Let's see what else they manage. Oh, Tuggin. Oh, they manage Tug and Tuggin. So Tuggin is a simple rules-based approach to tactical asset allocation with monthly income. The tactical monthly income, that's why no one has it. That's all we need to know. People don't care how stable it is. They want to be paid they want it to be stable. They want to be paid daily. They don't want to lose a cent to NAV, and they want it to yield 80%. But anyway, I digress. But tactical asset allocation engine of Tug is used to, okay, so Tug is just growth and Tuggin is breaking off a little income also. But Tug kind of runs the show. So now that brings my next question. Let's run Tuggin against Tug, see how much better Tug does. They should be about the same, but you always do better when you don't have to pay it income. It's just like if a single guy is always going to have more money than a married guy, other things being equal, especially if you have a trophy wife, because that's going to be taking income away from you. I mean, unless she's unless she has a social media presence and she makes her own money, she's a foot model or something. You never know. But anyway, Tug versus Tuggin. So Tug is the single guy and Tuggin's the married guy. So Tuggin should not do as well just mathematically. And they both do pretty well. Tug did a little bit better, but that's a pretty good look for both of them. That's a pretty good look for now. That's only for a quarter of a year. Let's go back since inception. I don't know how long this has been around. It's been around a couple of years. Yeah. May of 2022. So yeah, this is a good looking fund. And of course the married guy's money ahead because he's not having to support something else. That's literally what NAV depletion is. It's the NAV depleting because you're having to pay a yield out of it. That's what causes NAV depletion. So in any event, Tug has paid some dividends. It's paid $2.23. That's not bad. I mean, it's only 10% over 3.5 years. So it's not great. It's like 2%. It pays about what the SPY does or something. I mean, the SPY pays like 1.5. So that's pretty good. Either one of those could work. That's pretty good. Tug's getting a 16% average annual CAGR, whatever that is, CAGR. All right. So anyway, let's get back in the middle of this. But that was a good time to check out a good looking fund. Where were we? Okay, Tuggin. Then Big Y. Big Y is a good one. It's a Target 12 fund once again. So this is like somebody that's married and doesn't like their wife because it doesn't cost as much to support. Or maybe she's married to somebody that has a job and they don't require as much support or whatever. You're married and you don't have kids. That's kind of what Big Y is more like. So that's why it does a little bit better on yield. It's just math. JEPQ, Big Y is supposed to be a 12% target fund. Its trailing 12 month is 10.6. JEPQ was kind of coming up. It used to pay around 8 or 9. That's good to see a trailing 12 month at 10.37. At times it's paid close to 12. So maybe it's doing a little better with the recent pullback, but it hasn't pulled back enough to make volatility go up that much. But anyway, that's good to see. Then we have Soxy. Now, Soxy is a target 12 fund also. So Soxy's like the, so you have Chippy and Soxy. Chippy's the guy that has a trophy wife, and Soxy's the guy whose wife is also on Instagram and does stuff. Anyway, GPIQ, that's a good one, paying a 9% yield. KQQ is a great one from our friends over at Curve. Then we have Spin, 8.5%. That one's from State Street. It's highly sustainable. Then we have JEPI, paying 8.3. Triple QX, this is an old one. It's from Nuveen. It's a tactical overwrite. So sometimes they don't write all the options they can write, and sometimes they go further out of the money, and sometimes they go closer to the money, depending on whatever their rules-based system is. GPIX is a good one from Goldman, paying 8. Triple QA is equal weight Qs. I don't know who it's from. TLTI, once again, based on bonds, and we're going to call bonds sustainable. Just because they're bonds. Doesn't always mean you're going to make money. They're going to be a good investment, but they're sustainable, and they give you some diversification also. Then we have iDevo. That's a good one that I always hear people talk about, paying 5.3%. QYLG paying 5%. CanQ, we were just talking about CanQ today in Discord. That's a decent looking fund, paying 5% from our friends over at CanSlim. And then we have Devo. All right, so do you guys like any of those? What's going on in the chat? What is going on in the chat? Udar thinks NVIDIA is going to correct after earnings. Am I going to do another program today? What else am I supposed to do? I've done everything. I've done my morning live, my afternoon live, and my daily factor. I do have a couple of, I know, I apologize. It was misogynistic. I apologize. I do have stuff I could do, but no, I'm tired. This is going to be my last one of the day. Thank you for your comment, Bon. What are you hoping? Oh, you're hoping, yeah. You're agreeing with Dividend Degenerate. Let's see. Total Income Blast is going to be a major player. Yeah, hopefully so. I'm really happy about, I'm really excited about that one. They're doing lightning spreads. And so they should be able to pay an income and get a lot of upside. So hopefully it'll make the sustainable list. Right. And the chat's here. Okay. All right. So we got everything taken care of. All right. So let's get in the middle of this. Let's keep on going with the show. All right. Let's look next. We could look at the price. They put the quarterly return in the wrong place. Let's look at the stable DEX next. This is the relative stability to the market. Okay, so the least stable one is Soxy. It's only half as stable as the market. Now, stability is not everything. Like I've showed you guys before, sometimes things can be too stable. We have GPTY is about half as stable as the market. KQQ, about 3/4 as stable as the market. Tug-in, about 8/10. CLM, almost market stability. GPIQ, pretty stable. XPay, pretty stable. T-SPY, all the rest of these are obviously stable, but these are all about market stability. So we have T-SPY, iDevo, CanQ, and Triple QX market stability. Then above market stability, we have CAIE, Double QA, Big Y, QILG, JEPQ. We have Spin, 20% more stable in the market. XV, that's that barrier fund. Barrier funds generally are stable. That, CAIE is also more stable than the market. That's kind of what we'd expect. GPIX from Goldman does a great job at stableness. Then we have Devo, which is almost 50% more stable than the market. And the rest of these all are. IVVW, super stable. TLTI from Neos, stable as can be. TLTW, super stable. TLTP, super stable, and JEPI, super duper stable. All right, so ranked from least sustainable to most sustainable, or we'll just do it from most to least. And this is their rankings. I'm gonna override some of these on the editor's choice, but just mathematically, you have a fund here in TLTW that's paying a 16.8% yield. It's up 2% for the quarter, and is 64% more stable, less volatile, however you want to look at it, than the broader market. That's pretty dang good. But then in second place, you have Soxy, and that is has a NAV of about 10.9%, which is really good. Now, unfortunately, it gets marked down a little bit because it's kind of on the wild side, and it doesn't yield as much as TLTW. But that one could also work. Spin, this is the State Street Fund. This one, checks all the boxes. Quarterly NAV doing great, more stable than the market. Good looking fund. JetQ, IDEVO. I don't think these surprised any of you guys. Big Y, yielding 10% with positive NAV, positive 3% NAV. Market stability. QYLG, IVVW. GPIQ is looking really good also. That's a good looking fund. It has market stability, it's up 3%, and that's even after this pullback. That's as of today. Double QA, that's a good one. CLM, I won't get any disagreement there. That one has a little bit less than market stability. NAV's only up 1.5 points, which isn't as much as some of these other ones. So that's the reason it fell behind some of those. Has a little bit less stability and a little bit less NAV this quarter, but over the course of history, it's a 4-star fund, 5-star fund, whatever. It's a great looking fund. Then we have TLTI. That's a good looking fund right there. Positive NAV return, about twice as positive as the CLM. Well, not quite twice, but anyway, positive NAV return. Super stable, 1.5 times as stable as the market. Doing a great job. Then we have Devo, GPIX, KQQQ. I mean, any of these could work. I mean, look at KQQQ up 2.6% on NAV. Fairly stable, good yield. CAIE, better yield than KQQQ, but worse NAV. But a little bit more stable. Those are close. Tuggin's a good looking one we just looked at. QQX, TLTP, CanQ, T-SPY, GPTY, JEPI, XPay, and XV round out the statistics. All right, so I'm going to give my editor's choice next, but I'd be happy to take input from you guys. Hey, Grumpy, what's up? You bought more blocks today. Awesome. You're a big fan of yeah, I know it. I've already got in trouble. I've already made misogynistic comments. I'm not going to go further out of control. So, but yeah, I got you. Wink, wink. All right. What do you think about REX shares? Do they have downside protection compared to round hill leverage? TS2 versus TSLW. Let's just put them. I mean, I like both of those. They're different, but let's just put them here and see what. Well, then they'll also come back tomorrow night because they'll be on tomorrow night. So TSL, was it TSLP versus TSL? No, it was. Well, you can test that one too, but TS2 versus TSLW. So yeah, let's just run it since inception and see. TS2's beating it on total return. TS2's NAV is sure better because the NAV went from 24 to 25. TSLW has a little decline in the NAV, but I bet TSLW pays a higher yield. I don't know it does, but let's look. It pays 13 on 38 instead of 5 on 25. 5 on 25 is 1/5. 13 on 38 is more than 1/5. It's like, it's more. So anyway, yes, TSLW pays more. So it goes back to my poor analogy that I was making, but TSLW is having to support a larger withdrawal. You could say maybe a better analogy would be TSLW is like driving an 8-cylinder and TS2 is like driving a 4-cylinder or something. They both can get you there. Maybe TS2 has a turbo, but TSLW is a muscle car, so it's just going to take more to sustain. So anyway, that's probably a better analogy. But in any event, on total return, TS2's the winner. Now, remember, a high yield is a tax on the upside. TS2 pays less yield. So same thing. I mean, it's like, so we'd expect it. It doesn't mean that one of those or both of those might not work or might not work. So let's run TS2 against TSLP. And we'll look at all this tomorrow night also. But that's a great question. Thanks for asking. TS2 is a monster. I can't wait for the fund to funds to come out. Now, to be fair, Howard, he's always talking about, how stable his funds are. This thing went from 21 to 22 3/4. That's a great job. TS2, did not go up that much. It had positive NAV, but not as positive. Let's see which one pays a higher yield. 285 on 20 is like, 15%, and TS2 pays about 20%. It's actually more like 22% or something. Yeah. TS2 is a good looking fund. So I like those. Come back tomorrow night and we'll get in the middle we'll get more in depth and we'll run all the Tesla ones against each other. But that's a great question. TS2 announced a good distribution today. I like to see that. Check year to date and total returns and all that. All right. Put GOOW in dividend channel, please. Well, tonight we're talking sustainability, and I'm not looking at single stocks. We could do that after I get done with this. Yeah, of course, GOW, but maybe you didn't see the first of this. I'm judging in fact, I did the show on my top 10 show. Yes, GOW, GOY, a lot of those are, of course, they're killing it. But the ones that are based on single funds, they're totally dependent on how the underlying does. So this is it's also editor's choice. But yeah, no one has any. I mean, HOOW is killing it too. I mean, or Hui or Hemi. I mean, yeah, all the ones that are based on single stocks, they're killing it lately. But yeah, Google especially. Yeah, GOW is looking really good. I have it because I have XPay. I don't believe in single funds, or not XPay. I have WPay, and I've been very happy with it. So yeah, it's just not eligible tonight. I'm not saying it's not a great fund. It is just not eligible tonight. All right. So waiting for Bitcoin. Okay, is there anything else going on here? Both are leveraged. Yeah, so let's talk. I love talking about leverage. So I'm trying to go back here. Yeah, but you're right. I did check GOW on the air. It looks great. And that's, I wouldn't disagree with that at all. Yeah, I'm just making sure I'm catching everything. Yeah, but with the Berkshire buy, yeah, it's particularly good. Yeah, I do my top 20 show. I might even still have the top 20 in here. We'll look at it in a second, but I think I have the top 20 show. I bet it was number one. Now, the other thing is I don't think GOW's been around long enough to be in there, but let me check. Yeah, it has, and it's in there. And I swear it won the other night, or I think it did. If it didn't win, it came in second. All right, but back to the sustainable ones. Like I say, it's editor's choice, so I get to pick. I'm kicking TLTW out of first place. I mean, yeah, it's all, yeah. I guess the math is the math, but but anyway, let's look at it against the editor's choice. Yeah, GPTY is the editor's choice. It's the best of the diversified funds out there right now. It's beating all of the other ones, and it's paying a higher yield. So GPTY is definitely the editor's choice. You can put GPTY up against the Qs, and it's beating it. You can put GPTY up against a lot of these other ones that are good, like TSLP, great fund, or no, I'm not sorry. T-Spy, great fund. Nothing wrong with T-Spy. But yeah, GPTY is, so here's what else goes into, here's what I want to see. Maybe I could show it better in FinViz. And let me show you why I kicked TLTW out of the first spot. I mean, yes, it's stable, but it's maybe too stable. That's all I'm saying. And for editor's choice, I get to use my judgment. And that's all I do is back test these, and there's none of them are doing as well lately as GPTY. So TLTW, it could work. Hasn't even taken back its April highs. Now let's look at Tuggin. I don't know. Tuggin might be. I'll give it. Tuggin might beat GPTY. If Tuggin beats GPTY, I'll change the editor's choice to Tuggin. Tuggin's a good one also. But my point is, I want one that's sustainable for sure, and I want one that's taken out its April highs. And some of those ones that are too steady, they're super steady, but they don't have the growth. I'm also kind of a frustrated growth investor. But yeah, we'll run Tuggin against GPTY, and I'll knock GPTY down to second place if Tuggin beats it. I think it might too. Tuggin's a good fund. Let's see, August, September, October, November. Yeah, Tuggin's number one. Oh, it's T-SPY though. Hang on. Tuggin beat T-SPY, but so does GPTY. Tuggin's probably gonna beat GPTY. Nope, GPTY. I'm telling you, it beats all of them. It beats triple QI. Anything that you think that people always on the internet say, oh, that's super safe. Not as safe as GPTY. And the thing is, triple QI is awesome, pays 14%. GPTY pays 30% and beats it. So what did Tuggin pay? Tuggin paid like 12%. And I mean, I know that's close, but who else is really close? Another really good sustainable fund is GPIQ. I think GPIQ might beat it. If GPIQ beats GPTY, I'll switch the order of it. Nope. And not to mention, GPTY pays, 3 times the yield that GPIQ does. Or GPIQ, they pay 1.5 times the yield. Yeah, so that's just, that's just an amazing fund. Same thing, though. The thing about, look at this fund, it's one of the most amazing funds out there, the most amazing one out there right now at this point. And look at this. Let's see, GPTY, but no one buys it. Everyone, they talk, they vote with their pocketbook, and the ones that are super unstable are generally the highest in AUM, but not always. And then the ones that are just rock solid, like GPTY, is 82 million under management. I mean, anyway. All right. What else do you guys want to talk about? Yeah, health and wealth. I appreciate you being here. Yes, I have heard of XBTY. I like Granite shares. I like their strategy, but it's just that fund. That's like YieldMax, on steroids. Because they're dealing with some capped upside things, and they maximize yield. And so they'll do well in a runaway bull market. GOW is absolutely amazing. I agree with you. In fact, tomorrow night we'll do Tesla Tuesday, and we'll also throw Google. We'll do Google underlines. Come back tomorrow night. We'll do Tesla Tuesday, but we're also going to look at Google and Mr. Underlines because there's not as much to look at. There may be 5 Google underlines. There's GOY, GOW. GOP. So yeah, we'll come back tomorrow night and we will do that. All right. Just having some fun. Okay. You need a nice, good. Okay. Yes. I need a nice, good, sustainable one. Anyone else trying to open on S block as soon as possible? What's open up an S, a senior line of credit or something senior. Okay. Hey, DD, get out of here. You have a great night. Thank you for being here. You just learned about the buy, borrow, die strategy. I'm not an expert in that. I mean, I don't know much about that. I didn't hear of it until I started doing YouTube. But I'm older. That's for younger guys. But I do know people. That's what Elon Musk does. That's the way wealthy people. It's the way my dad taught me to manage, or one way you can manage money is if you have stock that's listed on New York Stock Exchange, and he taught me this in the 80s, you can get margin, and they'll give you a checkbook, and you can write yourself a check and pay yourself an income. Now it's a loan, you owe it back, but if you go get a bank loan, they have to run your credit. If that's what he told me at the time. Margin was prime +1. The prime rate was like 6, and so was 7. So no matter what your credit was, it's a great way to get money. The other thing is it has tax advantages. My dad's a CPA, and wealthy people will do that. They will have a lot of stock and borrow from themselves to support their lifestyle, and then buy, borrow, die. Yeah, it's a legit strategy. It's a legit strategy. Tech equals volatile. Don't be surprised that many of the tech stocks probably will lose 30%. And GPTY pays weekly. Yeah, GPTY is a good one. I mean, if it's beating T-SPY and it's beating all those other ones and paying more yield weekly. Now, but yeah, if crypto, not crypto, there's not really crypto, it's AI and big data. But yeah, if tech keeps falling, GPTY is going to keep falling too. But all of those other ones on the list are tech too, to one degree or another. You saw Tuggin was full of tech. If tech keeps falling, for sure. But that's the thing. We run the MaxFactor every day. I follow. It's not every day, every second. I have a spreadsheet that updates this live every second, and so I can pull a MaxFactor at any time. And yes, if tech keeps falling, one day we're going to have a MaxFactor top 20 show, and it's probably going to be, all super safe, boring. I don't know, but it won't be the ones that have been leading the past 6 months. It'll be other ones. Yeah, the MaxFactor knows that, and it's going to adjust to that. Why gold or gold? Why? I don't know on that one, but I have a gold video. Hey, thanks for being addicted to my videos. I appreciate that. Oh, HELOC, yeah. Okay, I thought it was SB lock, but that must mean something else. I got the lock part. I figured that's where you were going with that. I was just trying to think what SB meant, and I was thinking a senior, whatever. It doesn't even matter. But yes, I know what a HELOC is. Anyway, all right. Well, that's awesome. That's awesome. That is what an S block is. Okay. All right. I've heard of HELOC. I haven't heard of S block. So S block is the margin against your securities. You only pay interest on what you. Okay. Yeah. So I got you. It's like margin, but yeah, I got you. Security backed line of credit. I get it now. It's what I was saying. That's what my dad was telling me. I used to have a Charles Schwab account. And as soon as I signed up, they gave me a credit card, but it wasn't a credit card. It was a debit card, I guess. But I'm trying to think. I guess it was a credit card, because they would send you a statement and I could either pay it off. But if I didn't pay it off, they would just sell a little bit of stock. If you have stock, they know you're good for it. Elon lives off that. You defer taxes. There's all kinds of advantages to living off your stocks. Okay. Yeah. Okay. I got it now. I just never heard of that, but that's a great one. Securities backed line of credit. No, absolutely. And margin is way less. Oh, margin with less interest than margin. Yeah. So if you're just a retail guy with the Tasty Trade account and you get margin, it's probably be pretty high. But if you go get an SBLOC, you probably get a better rate and everything, and you probably have to have more money. No, I get it. Yeah, you need 100,000. So it's more for the upper middle class people and stuff, not for just middle class people or whatever. It's for people with a lot of extra assets. But you have a lot of extra assets, you can solve a lot of problems. I mean, they say money doesn't make you happy, and it's true. But there's a lot of things that can be alleviated with a little bit of cash. All right, so you're excited about QLDY, waiting on a bit more data. It'd be nice to see margin maintenance drop. I don't even know what margin maintenance is on it. That's one of the more stable ones. It's not in here yet because it's not old enough. Remember, there may be some perfectly great funds like K-Yield that may have made it in here, but they're just brand new. I don't think ULTI would have made it in here in any event, or ULTY for that matter. But K-Yield might have darn sure made it in here. You see the common denominator about this is, and that's where I was going with my comment about having to support something else, like driving a V8 or a V12, having a Ferrari. You have higher maintenance cost, and you have higher maintenance cost and higher operating cost. than you do if you drive a Toyota or whatever. So by the way that works in here, the ones with the higher yields, they're the Ferraris and Lambos. They're gonna have, just mathematically, they're gonna have more problems. About that, the reason I like GP2i so much, it has the highest yield out of any of these, and it's beating most of them. I mean, it's beating it beats JEP-I, total return. It beats a lot of these. Not only I did a video on it the other day. It beats a lot of these things since inception, and this quarter. Dividends reinvested, dividends not reinvested. It's had an amazing run. I don't know that it's going to continue or whatever, but I think that's how they're trying to fix ULTY. They're putting stocks from GPTY, like Google and others, Salesforce and others, and they're making that about a quarter of ULTY. So it should bring down ULTY's yield, but it should add some safety and stability. Once again, we need the market to go up. All of these need the market to go up. I mean, yeah, if tech keeps going down, TLTW is going to be the most stable. Or if tech keeps going down, one of these equal weights might start winning. This double QA is a better fund than people realize. It's NASDAQ, but it's equal weight. So there's 100 in the NASDAQ. So everyone has 1%. But the way the NASDAQ is now, NVIDIA is like 8% or whatever. These are all just evenly, everyone's 1%. They probably rebalance once a month. So this will do better in a tech crash because the techs are usually the higher concentrated ones. But I mean, it's still NASDAQ. It's not, nothing's going to do great in a tech crash, but and also this is like driving the Toyota. It's only 9%, so it doesn't have to make a lot of upside to support its yield, to support its withdrawals. All right. Yes, QLDY is doing great. Considering this market. Let's look at something. I have a graphic here for you. Divas, linear regression. Diversified divas. That's the wrong one, though. Hang on here. Let me share. I really do have something good to show you. And we're going to talk about QLDY. Thanks for reminding me. Thanks for bringing that up. Yeah, that one's doing amazing. Diversified divas. There we have them. All right. So, here's all these funds that I like to follow, particularly, they're what I call them is Alti competitors. I mean, Alti was the granddaddy of this type of fund. It's been around, for a year and a half. These other funds no one had even conceived of them yet. But it doesn't mean that some of them haven't come along and started doing a lot better, or maybe are better ideas. The hottest mess right now is ULTI, and I'm getting to QLDY in a second. But anyway, it's down 26% since inception. And that's NAV plus dividends, total return. Blocks is down 22%. LFGY down 15.8. Alti down 12.2. K-yield from Howard is down less than 10, about 9.6. And then we have WPay doing a great job. Even though it's leveraged, people say it's going to drop like a rock on the downside. Well, it's going to drop 20% more a week on the downside just because of math. But I mean, you can see so far, and this is based on 10 or 11 days, it's doing a great job. It's mid-pack and it's doing a great job. Now, not doing as well as GPTY. And in fact, if you line those two up, GPTY beats it since inception and for the quarter. Anyway, but GPTY beats everything right now. Chippy's doing well, of course, down 4. And then we have QLDY, the lightning spread. This is based on the entire NASDAQ. So it may not be really fair to compare it to these other ones because these other ones are based on smaller subsets. But I just like QLDY. And so I put it in here. I mean, I like all of these. That's why they're all in here. I don't have any ULTI yet, thank God. But it's not that I'm not opposed to getting it. I'm not going to get it when the market's in a free fall. But so you can even see QLDY it was just a little bit behind the Qs, and it pays that twice weekly income. Then down here is the dividends, and this is the percentage. This is what they've paid in the past 11 days or whatever. LFGYs, and ULTY are doing well. And of course, they're yield max. We'd expect that. W pays Round Hill. Round Hill pays good dividends also, but they generally pay a little bit less than yield max. And so that holds true. Now, then we have Chippy. Now, Chippy is yield max, but it's a target fund. So, and then we have Blocks. Blocks pays around 30%, I think. ULTI has only paid one dividend. They've been around 2 weeks, but they've only paid one dividend. So I think as far as ULTI and K yield, it's not a fair comparison yet because they were here for the first week and didn't pay anything. And then QLDY is going to pay around 30% too. I would expect it to pay about what Blocks pays and more than Chippy. But anyway, but I thought you guys might like that, the diversified darlings. That may be misogynistic also. Diversified divas, the diversified I don't know. I'll think of something to call it. But anyway, I want these kinds of funds that I like that have where they can move stocks in and out. They're like hedge funds, where they move stocks in and out. They do different option strategies. They can go short. They can go long, like K-Yield. K-Yield's a perfect example. So maybe I'll switch to the diversified darlings or the diversified dandies, maybe something like that. All right. So what else is going on? So you do like the twice weekly payment? Yeah, that's awesome. Richard, I'd rather be unhappy with money than unhappy. Yes, exactly. It could solve a lot of problems. I mean, it may not solve some of the most serious problems in life, but a lot of the more novel problems, like living in a bad part of town and getting your car broken into or whatever, money can solve that. It can't fix you if you're sick. It can't repair your marriage, but it can do lots of things. QLDY is great given the market. And that's why I thought you guys would like that little. I'm going to start breaking that off into its own show, the diversified, whatever I'm going to call it. I don't know. I mean, that's going to start being a daily show. And that's, and I'm also going to look at the trades that ULTI and K yield and ULTY for that matter, and Blocks for that matter. Those are kind of my four favorites. I mean, because QLDY is an index. They don't switch funds in and out. Chippy, it's chip stocks, it's whatever. But I really, the ones that are the most interesting as far as trading goes is ULTI, ULTY, Blocks, LFGY, and K yield. W pays just a fund of funds. So that's, it's cool and stuff, but I'm going to start tracking the trades and showing that sheet and making it its own show. That's why I'm trying to develop a brand or a name, and I'm experimenting with different stuff. But yeah, it's doing great given this market. Absolutely. I wonder if anyone else will make a twice weekly pair. When they put the prospectus out for QLDY, it was supposed to be a daily payer. That's what the prospectus said. It said it was going to pay daily. So, I mean, that's crazy. Homeless Zombie, I'm DCAing into curve ETFs. I might go heavy on K yield. Yes, Howard is an amazing guy. His freaking Twitter game is on fleek lately. He's on fire. I mean, that guy, he's doing some good work out there. Hey, anyway, it looks like Health and Wealth had to get out of here, but thank you for being here, bud. I'm just making sure I didn't miss any of these. Yeah, it does. It does. Let's see. Once again, though, it's like driving a V8. It pays a 32% yield. So, of course, it has higher drawdown. It also has more risk. But if you're looking at, it's also compounding your money way faster than something like T-SPY or XPay or whatever. But yes, to be fair, though, that's a good point. Like, let's go XPay, for instance. GPTY is kicking us butt, of course. But in April, XPay did better. Absolutely. Now, remember, though, GPT XPay pays 20, GPTY pays 30. So you're getting 50% more yield. So it's more yield to support. So that yield means risk. So, yeah. And I did a video on this yesterday, and I said that. I shouted out to XPay, or maybe it was T-Spy, but it's both of them. I said, and to be fair, I said XPay lost about half the amount in the April pullback. Yeah, for sure. With risk, you get with reward, reward and risk go hand in hand. So, yeah, we go back a little bit further, and yeah, you can see here. Now, XPay was still down 15%, but yeah, GPTY was down 25%. So it just gets a lot more upside. XPay doesn't even sell options; they just sell stock. It's just a different deal. It's just a different deal. But they do it in a tax efficient manner, depending on your tax situation. XPay might work out, and other ones do the super tax efficient thing also. But yeah, that's a good point. That is a good point, but it's editor's choice. I'm the editor, and so that's my choice. I gave the other ones a chance. I thought maybe one of those other ones might have better total return, and they're close. But yeah, but that's a good caveat, because it goes back to the thing about having to support. When you're having to support an income, it's why any of these that pay 80 or 90, that's like driving 12 V8s or I don't know. That's like being a 16-year-old kid and having a 12-cylinder Ferrari. You have high insurance, you have high gas, you have high everything. Tires are expensive, maintenance is expensive. So yes, now is it going to be you're going to have the most total return in a Ferrari, 12-cylinder Ferrari? Probably so. You're going to get the most cloud and the most looks and whatever, but it's also going to have the most costs that are associated with it. So I kind of expect that. Did I just close that window? Anyway, but yeah, that's a good point. That is a great point. I appreciate all these good points. All right, it looks like I've caught up with everything over there. So now let's see what's going on. What's an awesome list of fun? Why did you say that? What happened? I'm not catching on to that. Oh, did you not know it was a biweekly payer or something? Or maybe you were reacting to that it was going to pay every day. Yeah, that one, the prospectus said QLDY the prospectus said it's going to be a daily payer. And I said they would never do it. And in fact, that's the last time I talked with Jay. I emailed Jay and I said, is this going to be a weekly payer? He couldn't talk about it because it's a prospectus. But anyway, it turned out it wasn't one. But I remember SoCal Steve saw it and thought it was going to be a daily payer because he read the prospectus. It said it's going to pay daily income, and he read the prospectus. And so, but then I was watching one of his videos, and I said, I don't think this will ever pay daily. But he said, I think it will. I mean, it says it right there. So anyway, I mean, it does pay frequently. It didn't pay daily, but it doesn't mean that they can't go to daily or something. Okay, so your homeless zombie's addicted to try to get house money through dividends. So whatever ETF starts producing profits, I wanted to, yeah. It looks like HOOW is your best chance at house money. I mean, right now, or it has been. Just based on one stock thing, it just adds in a lot of variability to it. Coinbase. I'll give you an example. See, the one that was the house money winner was COIW for a long time, and it's a great looking fund. I have no complaints with it, but they missed earnings really bad. You can't really tell it on this chart, but they've just never really recovered. And that can happen to single stocks. But so that, but the index ones, it's harder for that to happen. And the thing is, if an entire index goes bad, everyone else is in the poorhouse also. Because the whole index is bad. So, but if you load up on a single fund, if you put all your money in HIMI or HUI or whatever, and then, they miss earnings really bad, or they, some kind of crazy event happens, that's just part of the risk. Whereas if your money's in an index, there's not much else you can do. So that's why I kept the index ones on there. Okay. Will the recovery for blocks be possible? I feel like it would need a consistent bull. Yeah, it's going to need, it'll need Bitcoin to turn up. I mean, everything in that portfolio is either directly Bitcoin or indirectly Bitcoin. So, but yeah, recovery on all these is possible. You know, I mean, let's look at some right here. Let's look at some right here. All right. So actually, I was going to put Bitcoin down here. And we'll look at some of the high yielders up here. We'll look at blocks and ULTY and stuff. So, so people thought ULTY was cooked in April. You know, I mean, but anyway, but what happened is Bitcoin is Bitcoin. It's not really Bitcoin, but it's IBIT. Is IBIT half of Bitcoin? Yeah, I'm trying to think how it corresponds. But anyway, you know, if 43 corresponds to an 80,000 Bitcoin price, could probably roughly, but anyway, whatever, you know, Bitcoin was cooked too, and you know, after the April lows. But then Bitcoin went from, or IBIT, whatever you want to call, went from 43 to 71. That's 30 points. That's 75%. Alt Y has a lot of Bitcoin related stuff in it. I mean, it's mostly all memes and Bitcoins and stuff like that. Miners, Mara, CoreWeave, you know, all that kind of stuff. So, you know, blocks will do the same thing if Bitcoin will do the same thing. It's just math. All of these can recover. It depends on what the underlying does. And you can see right here the day that Bitcoin made its high, sure enough, Alt Y did. And now Alt Y is down from, what is that? And this is including dividends. I can turn off dividends, but anyway, this is how your investment's doing. But it's down from 506 to 411. So call it $1 on 5, 20%. It's in a 20% drawdown, and Bitcoin is in a 20%, like a 25% drawdown, 71 to 54. Yeah, that's like 25%. The difference is because ULTY sells premium, and they have some callers on there, and they have puts, so they don't drop quite as fast, but it's still not going to keep them from dropping. Blocks is the same exact situation. The reason everyone thinks blocks is so good is because it came out when you know, at the time it came out, Bitcoin went from 58 to 72. That's 14 points on 60, 15 on 60 is 25%. It's a 25% rally. And blocks has those lightning spreads and did much better than 25%. Blocks killed it, but it can't go up if the assets that it invests in doesn't go up. I mean, that's the only reason ULTY and blocks is down right now. And neither of them suck. It's just they're underlying. As soon as Bitcoin turns around, they'll go back up. It's not just them. It's also WPay. Same thing. It may not be quite as heavy on Bitcoin, but it's also heavy on tech and stuff. Same thing with GPTY. GPTY is off because the market made a high. It's not off. GPTY actually got in one additional high after the Bitcoin high. The Bitcoin high was Friday, October 3rd, and GPTY blew up right into the last. I almost sold the exact high. I had a bunch of this that I bought in April. I sold all of it because I thought the market was over whatever. And also because I wanted to buy, some blocks and some Q yield and some other stuff. But anyway, but I wanted to lock in those profits. But I bought some on Liberation Day. You know, I ran that from 31 to 50. That's 20 on 30. That's a 66% gain. You know, that's including dividends, but still, that's really good. But sure enough, though, you know, the market's pulling back. So with GPTY, a better underline would be maybe like some kind of AI fund, not like AIQ. Yeah, we'll just see how that looks. So new pain. Okay, yeah, it's the same thing because it's communications. They made the high at the same day. So yeah, so that's why GPTY has been underwater lately because the stocks that it trades are underwater. But that's why I don't just look at the past 2 weeks. I go back and look at a quarter, and then I go back since inception, and GPTY is beating all of the ones that are supposedly stable in both time periods. But yeah, it needs the, all these things track something. Even triple QI, it's a great looking fund, but it tracks the Qs. QLDY is a great fund, but it tracks the Qs. And you can see here, well, anyway, so we put up here, and then I'll put up the SPY. SPY's close enough to the Qs, but you can see right here, they made their highs when the SPY did. The SPY came down and made a lower high, and triple QI is down also. Now, triple QI is a good fund, just like GPTY is a good fund. But I mean, it's tracking something, and so all of these will turn around when the market turns around. AIQ, that's a good one to. I think that's a good one to compare it to. I'm trying to make fair comparisons and stuff. Hey, trucking for dividends. Okay, let me catch up on these, then I'll answer your question. K-yield seems like a hybrid of ULTY and GPTY. Yeah, possibly. It's not a bad comparison. Howard just does his own thing. He does stuff that no other funds do. He'll just buy options. He'll just, like Amazon had earnings and he bought an option the day before, or for the fund, K-yield did, and they were up like 10% the next morning. You sold the option and took it off for a huge profit. But I get what you're saying. I get what you're saying there. All right, let me catch up on these. Will the recovery for blocks be possible? Like I say, people thought that ULTY would never recover back in April, and it did. So it just needs the market to go up. So the list of funds you want to cover daily trades on are me too. I'm going to start making that its own show. The diversified, whatever. I don't know. Maybe I'll call it the hedge fund heavies or something. All right. Hello, Max and friends. Trucking for Dividends is here. All right. So this was a good question. Max, what strategy does NEOS use that allows BTCI to recover after a drawdown? Yeah, let's look at that. That's a great topic. And we were just talking about that kind of stuff. So recovery and all that kind of stuff. Okay, so BTC. As far as the strategy, NEOS is just all of their funds do pretty well. I think their strategy is they don't overpay. And the way they don't overpay is I think they use monthly options instead of weekly options. The weekly options generate more income, but like I say, income's like a V8. It's more to you. It's harder to support. You have to put more gas to get the car going. Because so I'm not sure on that. I haven't done a review on BTCI, but this one actually because it's not AI or it's not SPY. BTCI, we need to put that down and we need to get up. IBIT is the fairest comparison for it. And it made a new high exactly like Bitcoin did. Made a high right there and a lower high right there, made a new high. It made a high right there, but it was a lower high. Yeah. So you think they recover more? Well, I mean, let's look. It went from 40 to, what was that, 65, 62, 22 points on 40. Yeah, it was up 50% off the April lows. But remember, the underlying was up 75%. Because I've already done the math and the difference is because it has to support a yield. I bet they pay less yield in 6 months. I bet they pay about half the yield of some of the other funds. NEOS is good ones. Let's just do NEOS like this. Let's run BTCI against, I don't know, XBTY. I know XBTY does not made a lot of people happy lately, but it pays a really high dividend. Remember, it's like driving a 12-cylinder. The dividend is the tax on the upside, or the distribution is a tax on the upside. I mean, all other things equal, it's just, you pick a fund with a high dividend, it's gonna be more risky. Doesn't mean it can't do great, but Yeah, XBTY, they use leveraged and they use weekly. So they have two strikes against him. I bet you BTCI uses monthly and uses unleveraged if I looked it up. But let's look at their distributions. So they paid $8, 8.5 over half a year. So that'd be 17 for a full year. So 17 on 60 is 20%, something like that. Or no, 30%. I'm sorry. Yes, just over a quarter. Yeah, 30%. Okay. And XBTY is going to pay 20 on 25. So that is 4/5, and 4/5 is 80%. So that's the difference right there. They just pay less. And there's different ways they can do it. Usually they step out to monthly options, and that makes the more stable funds. Did you see the funds on my stability list tonight? A lot of those were monthly options. TLTW's monthly, SOXY, I don't know on SOXY. JetQ is monthly. I bet IDEVO is. Big Y is definitely monthly. QILG is monthly. IBBW is probably monthly. GPIQ probably monthly. Monthly options are the key to stability, but you just have a tiny yield. If you have to be all right with 8 to 12 to 14%. Now, T-SPY uses daily. But they do something special, but the timing of when they sell their daily options to get extra upside. GPTY uses weekly. So, so that it generates more yield, but of course the more yield generates a bigger drawdown, like you guys mentioned. There's more risk with more yield. JetBuy uses monthly, and XPay doesn't even do options. So, yeah, but that's probably what it is. There's several variables you can do when you sell options. You can either go out for, you cannot sell to get more upside. You cannot sell 100% of the portfolio. You can sell like half the portfolio. Okay. So you have half the yield or whatever, but you get more upside. You can also, instead of doing weeklies, you can go out to monthlies. Once again, less yield, more upside. And then there's other ways to do it also, but those are the two main ways. All right, what are you doing, trucking? You did, hang on here. You sold 2,500 shares at WPay and you bought 2,000 shares of QLDY, trimming your tech exposure. I've been trimming everything lately. I've just been worried about the market. Yeah, we can look at my portfolio. I showed it after work, but you guys may not have been on the after work show. And I have a little app that I'm trying to design to help keep me rebalanced. So portfolio reallocation planner. And so I can have the current percentage, and then I can put in the target percentage. And I'll show you an instance. For instance, like WPay's at 5.89. That needs to be at least 10. So I can put in 10 right there, but then I'll have to take it out of somewhere else. But then let's say there's a fund that I don't have on here yet, like, CAIE maybe. But in this case, I really want to get some of the REX fund to fund. So I'm going to put RFOF. I don't know what the ticker is going to be, but I want to get, let's say I eventually want to get 10% of that. And then let's say I'm going to cut some of these. Let's say maybe I cut some more ULTY. I don't know. Let's say I want to go down to 10% on ULTY. Okay, well, I can put 10% there. Anyway, then it'll add up the columns and it'll tell me what I'm at. So I think it's a real handy little tool. Anyway, I'm working on that. But forget about all that. This shows the daily change in the current allocation. So this is my current allocation. Cash, about 18%. YQQ at 13%. And then Salty at 6.7%. YQQ is inverse and Salty is inverse. So I have 19% in inverses, 17% in cash, because I think the market sucks. And I've thought it for a while, right in here. Now, hopefully I'm wrong and I'll switch it around, but that's my defensive allocation. But the blocks is killing me. 10% of my portfolio is in blocks, and blocks drops, twice as much as a lot of these other ones when it drops. And that's all we've been doing lately. Now, BITK, this is from Matthew Tuttle. This is a Bitcoin fund. It drops, it was down 5% today. Heck, it was down more than blocks. Blocks was only down 3.9, and ULTY, of course, it has the puts. It protects capital a little better. K-Yield does a great job. This may not have been right at the end of the day. This was like at 2:30 or something. So these may have changed. but WPay is doing a good job, down less than 1%. There's that QLDY. QLDY needs to be up to 10% too. So then I have, if I want to get the Rex fund of funds and put it at 10%, I have 116 allocated. So I need to find somewhere to cut. It doesn't have to be all at once. I've been trying to wait till days that it rallies to reduce, positions. And then on days that we're down, I try to add them. So I don't have to do it all at once, but that's kind of what I'm thinking. That is kind of what my thought process was. All right, guys. Well, if you don't have anything else to talk about, which is fine, we've been going for a long time, hour and 10 minutes. I appreciate you all for being here. Don't forget, this is not financial advice. Consult your own licensed financial planner. YouTube could be a place to do some research, jot down some questions, but then go bounce the questions off a professional. Remember, the professional knows you. I don't know who you are. The advice that I'm giving, I think, is good advice for me, but I don't know about, I don't know about you guys. And you don't have to be licensed to give yourself advice, but you have to be licensed to give other people advice. Don't forget, if you like this kind of content, you can always support the station at paypal.me/MaxConvexity. And other than that, if there's any last minute questions, I'd be happy to take them. If you have anything, put it in here. I'm not in trying to get rid of you guys. Bond, thank you for being here. Am I a fan of winter? I don't have a problem with winter. When I was looking for an inverse to buy, I considered winter and I considered fiat. Quite frankly, I don't want to bet against Michael Saylor. I mean, and winter was already up so much. Salty was still kind of down. And I like how salty, and I'm mainly trying to protect my blocks and my ULTY. Well, blocks, because those are my riskiest funds. Blocks and ULTY have the same kind of stocks that Salty shorts. So I thought that would be a good way to kind of take some of the heat off of some of those, but still allow me to collect the big dividend that ULTY is paying. So that's why I chose Salty. Now remember, I also have YQQQ, which is just a short on the whole NASDAQ. So if the whole NASDAQ drops, YQQQ should be all right. But Salty specifically is short on the meme economy. It's short all the the meme type stocks or the Mars of the world and those kinds of things and whatever's hot lately. That's what it's short. So I am a fan of winter, but when it came time to make a allocation for myself, I thought Salty was more appropriate given my portfolio and given what I'm worried about. Like I say, I realize that Salty and blocks are killing me, especially blocks. But I also realize that blocks can go up really fast. Maybe not Alti, but it doesn't go down as fast either. But in any event, so I didn't really want to sell blocks, and I definitely don't want to sell Alt-Y. It's paying a big yield. But so now I have 12% Alt-Y, and I have 6% Salt-Y. So, it's a 2-to-1 relationship. That should balance out pretty good. I don't have to worry. I don't have to be staying up at night worrying about ULTY anymore because it has protective puts. And even in a market decline, Salt-Y will do great also. All right, guys. Well, thank you so much. And thank you for all the good questions tonight. I really enjoy those questions. And you guys gave me some good stuff to talk about, some good things to think about. And you guys made some good points too. With lots of, you guys had lots of good points. Some of this stuff I may have wrong, and lots of times I see what you guys say, and then I kind of change my mind. Have I looked at this one yet? Sold 2,500 shares of WPay. Oh yeah, and bought QLDY. I liked it. I don't have a problem with WPay. I mean, it's holding up pretty well. So I mean, but also, I mean, yeah, it's still. I mean, it still needs the market to go up. All of these need the market to go up. But they can all recover if Bitcoin recovers. You saw what blocks did and what ULTY did this summer when Bitcoin was up 75%. So they can go up again also. All right, guys, thank you very much. And you have a wonderful evening. I will talk to you later.